Western Canadian Properties Group has assisted our clients acquire over 12,000 units of investment property across 85 different projects in North America. Our mission is to help our clients acquire brand new cash flowing properties in high growth markets within Western Canada.
3 words, LNG. That's going to be huge for this area of the province. Because what most people don't understand, I think a lot of people up north do, but when we talk about the billions of dollars that are going to be spent to build a plant or 2 or 3, whatever happens in the Kitimat Terrace Rupert area, that's short-term work, short-term investment. Because once that plant's built, it's done. What that means though is 30, 40 years of drilling and growth and activity in this area, because they have to make sure that they constantly have gas going into the pipes to get to the coast. So most investors, most people who've been coming up to the region, when they start looking into it, that's what they see is that long-term investment. As a former mayor, again, I started when this development was at the conceptual stage. And I have to say, this area here is like a hallmark for the community because this is how it's done properly. When a community like this starts growing so quickly and you get 4, 5, 6 developers and everybody has a different idea and everybody's kind of jumping around, you start having a bit of a hodgepodge. And as a council, I know it's been a lot of work trying to really try to work with that dynamic and make it work for the community as it grows. But this is great. This has been a great development. It's being done right, and it's getting a lot of compliments in the community of what should be done around a community plan and working with the city.
An opportunity like this, and I saw it firsthand when we invested in Fort McMurray almost 20 years ago. An opportunity like this only comes along maybe once or twice in your lifetime. But I don't like people just to take that information from us at face value. What I like to do is let them come up and see it firsthand, hear from the mayor, hear from the director of planning, talk to some of the top realtors in town, talk to the property managers, and really see what the opportunity is that's there.
Industry in particular, could be as large as the oil sands in Alberta. Really in northern BC, what's driving all of this is the fact that Asia needs the resources. They need the oil and gas, the agriculture, the forestry, and the mining, and a very significant amount of that is in northern BC. And also in Alberta and Saskatchewan, but significantly northern BC. So really there's a resource wave that I think is an opportunity to really be able to ride that resource wave. And a lot of the growth that's happening in the liquid natural gas came as a result of the big tsunami that they had in Japan. And before the tsunami hit, there were 52 nuclear reactors operating in Japan in particular. And today, there's currently none of those nuclear reactors. There were 2, and then on September 15th, they closed them. But as of today, there are no nuclear reactors. And so, one of the things that this is leading to is it's leading to a real critical supply shortage in Asia. And so in the last 3 to 5 years, there's been a massive investing in Asia to build facilities that can receive natural gas. And so if you look at these little red dots that are on the screen in Japan, China, and Korea, each one of those red dots represents an LNG facility that has been built or being built in Asia to receive liquid natural gas. So there's very, very significant monies, almost $50 billion has been spent overseas to receive those facilities. People believe that we're already shipping, but as of today, the the infrastructure in Canada is not in place, we're shipping none of our natural gas to Asia. And part of the excitement in Canada is that we have a sole captive audience. Our audience to ship gas today is North America, Canada, and the U.S. And we sell our gas for $3 to $4 a BTU. In Asia, they're paying almost 5 times for that same gas. So there's sort of, it's a bigger market, number one, and number two, it's a market that's paying much more money. So what about us? In BC, we have what is believed to be 150 years supply of natural gas. We have what is believed to be 30% of all the natural gas in BC, 30% of all the natural gas that's in North America. So that's a massive, massive field. The two areas, one is called the Horn River play, and the other one is called the Montney, are massive, massive plays. In Canada, who you've probably seen their office downtown, and Canada has an acreage out near Dawson Creek in Fort St. John of almost 1.2 million acres. So very, very significant amount of gas in BC, and most of the gas is centered around 2 towns, Fort St. John and Dawson Creek. Fort St. John has a population of about 22,000 people. Dawson Creek has a population of 11 or 12,000 people, and they're about a 40-minute drive apart. So really, all of the activity for the drilling and the finding of the gas is really around these 2 areas. So again, if you followed the news, what you've seen over the last, probably starting about 2 years ago, there were, almost monthly, there's been an announcement of another LNG facility applying for an export license. This chart shows 6 or 7 of them. There's actually 12 applications that are in for LNG facilities. 7 of them have applied for export licenses. One of the largest ones is in Kitimat. They currently is Chevron, and they currently have 800 employees working right now in Chevron in Kitimat, and they're expected to spend about $800 million this year just to try to get to the point of a final investment decision. The biggest change that's happened in the last 18 months is that it's really brought in all the big players. If you're not a big player, you're really not in the game. It's the Shell, it's Chevron, it's Exxon, it's British Group. On the left-hand side, you can see Petronas. That's the Malaysian state-owned energy company out of Malaysia, and they've committed $36 billion to LNG development in BC. So very, very significant players. And obviously the projects they're proposing are very significant. As I mentioned, the Kitimat LNG is about $4.5 billion. They're looking at having spent about $800 million by the end of this year. The next facility, this is their site in Kitimat. The next facility is the Shell. They've partnered with Mitsubishi KOGAS. KOGAS is the Korean state-owned energy company, and they've also partnered with PetroChina. So part of when you see a big consortium like Shell, part of why they've partnered with these other entities is so that they can have some control to make sure that they have supply, because the biggest part of the arrangement is going to be a 25-year contract with these companies and these countries to receive the gas. So this facility is going to be one of the largest private projects in the history of BC. And then you've also got Petronas. About a year ago, Petronas bought Progress Energy out of Calgary for $5.5 billion, and they've now partnered with JAPEX, and JAPEX is the distribution partner to distribute the natural gas in Japan. And then, of course, Spectra Energy and British Group, another $10 billion project in Prince Rupert. And all of the gas and all of it comes from Fort St. John and Dawson Creek. Big players in town, Canadian Natural, Encana, Shell, Petronas, Progress Energy, and the list up there just goes on and on. So one of the things that's happening is because these facilities are being built, or being proposed to be built, they have to prove out that they have the reserves to provide these countries 25 and 30-year supplies. So there's a big jump right now in the service companies going in there, drilling more wells, proving out the servicing. Big jump this year in that. And the expected investment, Petronas and Shell have announced that they're looking at 750 new wells over the next couple of years, $4.5 billion. And Encana is looking at 80 to 85 new wells, about $1 billion, $1.7 billion. And then on top of that investment, 2 of the 5 pipelines, the natural gas pipelines, are already in place, but 3 more are proposed. Those 3 facilities would take the gas from Dawson Creek and Fort St. John out to the coast, to Kitimat and Prince Rupert. There's actually a couple of smaller LNG facilities. One is being proposed as well, and these aren't even really in the news yet, but one's being proposed for Campbell River, one's being proposed for Port Alberni, and another one's being proposed for Squamish. But at the end of the day, all of the gas comes from where the 2 main areas, the Horn River Basin and the Montney Basin, right outside of Fort St. John and Dawson Creek. And these pipelines are a big deal. Each one is about $4 billion. They're certainly not as controversial as the gas, as the Northern Gateway oil pipeline. And what's interesting is, if you look at the date on this article, so it was really only, sort of June that Exxon joined the race, and they got a 25-year export permit. Again, it's really becoming kind of the big players are there. So on top of the LNG in the bottom right-hand corner, which is, depending on how many of these facilities go ahead, is projected to be anywhere between about a $50 and a $250 boost to the economy. You've also got billions of dollars being invested in forestry and in mining and what's happening in northern BC. Specifically, the capital spend that's being proposed for the Peace River region up in Dawson Creek and Fort St. John is a massive number. Again, over the next couple of years, it's sort of in that $50 billion range. So if you look at it, it's really broken down over 3 things. The light blue at the bottom is the drilling. So you can see that in 2013, it was about $2 billion spent on drilling. You can see how that's going to grow sort of to 3, 4, 5, and then almost stay at that $3 billion number for a long time. Then you've got the spike, which is the export terminals, and this is only assuming that 3 of the LNG export terminals go ahead, and then the silver at the top, you've got the pipeline construction. So you're sort of right at the beginning of a very, very significant number. This came out of the Globe and Mail about 10 days ago. This graph is in the Globe and Mail. And so, like I said, we were up there this weekend, and you sort of say to yourself, well, if you're there and you're on the ground, what's really happening? What's significant is 6 months ago, the brand new Shell office opened. They have about 180 people in this office. They have about 800 people in the region. And the word on the street is they're looking for another facility to house, because they've got a very significant expansion plan coming. On top of that, you've got Talisman Energy. Again, what's impressive to me is that each of these buildings are brand new. Both the Shell, the Talisman, and the Canadian Natural Resource Building have all been opened in the last 6 months. So it's not like they've been there and this is happening. This has been going on and on. We're right in the middle of this happening, kind of right before our eyes. Again, there's the Canadian Natural Resource Building, and I don't have a photo of it, but right next to that, the BC Oil and Gas Commission just built a beautiful $30 million building where they're housing all their staff because they're dealing with all the applications. But we went and talked to the local school board. Their estimate for numbers from what they've been told is they're planning on they would like to add 3 new schools in Fort St. John. Now that's significant because in BC there's only 4 municipalities that are over the next few years or even applying with the government to add new schools. And Fort St. John wants 2 elementaries and a secondary school. But they're building that because Shell has told them that they believe there's 4,000 jobs coming in Canada, 4,000 jobs coming in BC Hydro, 7,000 jobs coming. One of the things when we drive by, this is the brand new hospital. This hospital opened a year ago. So if I took everyone here to Edmonton and I drove you around Edmonton, there's 1 million people in Edmonton. There's 4 hospitals this size. okay? And so for a city of 1 million people, they have 4 hospitals that are in the $300 million range. Fort St. John has a $350 million hospital, and there's 22,000 people live here. So if you think about that, somebody is obviously building not for what it is today, but for what it's going to be. Kind of a funny thing is when you drive around to the side of the hospital, the average age in Fort St. John and Dawson Creek is about 30, and the average income is about $79,000. So you got lots of young people there. And since the hospital opened, they have a wing on the side, and they call it the birthing center. And they've had about 300 births in the first year. So on the cold winter nights in Fort St. John, I guess that's the recreation. So, you know, what we really try to focus on is, rather than figuring out the increased property values, but start at the bottom and figure out, you know, where's the real GDP growth. It's a very simple formula. If you find where the people are, where the jobs are, the people are going to move to. Where the people are going to move to, your rents are going to go up, and where your rents go up, your values are going to go up.